Hello guys, it's Dale here with a new trading video. Today I'll do a swing trading idea, which means that we will be talking about daily time frame, because daily time frame is my favorite time frame to do a swing trading analysis. We will be talking about euro dollar. So what you see before you is the euro dollar daily chart, and what I want to talk about today is this resistance which formed at 1.1210. This resistance is based on a setup which is called the rejection setup. It goes like this. You need to see strong trend activity, like in here, in this case, strong buying activity, and then strong sell-off immediately afterwards. So this is a strong rejection of higher prices because strong sellers, rejected the higher prices. So what happened here was that aggressive buyers were pushing the price upwards, but then, as you can see in here on volume profile, sellers started to sell aggressively, and eventually they became stronger than the buyers and they pushed the price downwards. And this is the most significant zone within the rejection, because this is where the heaviest volumes within the rejection before the price turned were traded. The level which I printed here is at the beginning of that heavy volume zone. In my experience, this is the place where the price is most likely to react, and when it reaches that zone at some point in the future. So we just need to wait for a pullback to that level, and when the price reaches this zone, we can go short from there. Now this is a daily time frame, so it may take some time before the price reaches that zone, but it doesn't really matter. In my experience, markets have a great memory, and even if this takes a week, 2 weeks, or even a month, or 2 months, or even half a year, or even a year, chances are that the price will still react to those heavy volumes, as the institutional sellers who rejected the higher prices here will most likely defend this zone, as it is clearly important for them, as you can see in here on the volume profile. So what you want to do with the volume profile is select that rejection zone, look for significant volume bump, like this one. If there wasn't a volume bump, I wouldn't be trading it, but as you can see, this zone is really important because heavy volumes are traded there. So it's good to go. We just need to wait for that pullback. And because this is swing trading, you need to set the stop loss and take profit accordingly to that. In this case, as you can see on the chart, my stop loss is at the top of this rejection, which is at 1.1274. And the take profit, this is just with risk reward ratio 1 at 1.1145, but the take profit could be even bigger. All right, bigger than that. What I prefer is slightly positive risk reward ratio. So depending on how the price will react to that level, and depending on the price action and volumes, I'll be deciding where the take profit will be, where the final take profit will be. But the closest take profit that I'm going to accept is in here. So it will be either in here or somewhere further. But right now, this looks like a good place for a take profit. And the reason is, if you look in here, the price reacted pretty sharply to that level, meaning that it worked as a resistance, right? And if the price goes like this and reacts to that resistance which we have in here, that level which we have in here, then it will hit this level which was a former resistance in the past. But when the price blew past that resistance, the resistance became a support, right? This resistance. So if the price goes past it, the resistance will become a support, and when we go short from here, the price will reach that support and hit it in here. So currently this looks like a good place to quit that trade just because of that. All right. And I haven't mentioned that, but the reasoning behind the stop loss, there are two reasons. The first reason is that the stop loss needs to be behind heavy volume zone, which it is. And also I prefer to place the stop loss at swing points. This is the swing point. All right, so this is why I placed the stop loss in here. I'm trading my swing trades with alternative stop loss method. This is a method which says that basically I quit the trade if candle closes, the daily candle closes past that stop loss, which is in here. So daily candle needs to close above that level for me to close that trade. If the price simply goes like this and the candle looks, for example, like this, little pin bar testing above that stop loss, I wouldn't close the trade and I would still wait and hope for the price to go towards that take profit. So only if the daily candle closes past the stop loss zone, which is in here, then I will close the trade. All right. So that's about that. That's about the euro-dollar analysis. I hope you guys liked it. And if you are interested in learning more about volume profile trading, then what I recommend is visiting my website, which is at trader-dale.com. If you click this button, which says browse courses, then it will take you to this page. And in here, there's the elite pack, which is educational and indicator pack, which will teach you how to trade with volume profile. It includes volume profile video course, my personal trading levels. You'll be getting those every day. Those are day trading levels as well as swing trading levels, and my custom-made volume profile indicators for various trading platforms like TradingView, NinjaTrader platform, or MetaTrader. There's also a couple of bonuses and free tech support for each member. And if you want to see more in detail what you are going to get, then I recommend checking out this video, which breaks all of that down nicely. So that's about that. Thanks for watching the video, and I'll be looking forward to seeing you next time in some next video or in our members area. And until then, happy trading.